Hello, Miami. How you doing? All right. Now it's day 2. It's almost lunchtime, and you're still in a room. This tells me that you are the hardcore crowd. So for that, we're going to reward you with an awesome panel, which is Emerging Managers Investing in Web3's Future. Now, the venture arm of our group, Fundamental Labs, has been investing since 2016. We've made close to 300 investments, and we're in the process of launching our Fund 6. Today, we have invited many of our friends on stage, and we wanted to showcase the best talent in the VC world right now. So let me introduce my panelists. I have Dave Wang from Palmera Crypto, Yida from Shima Capital, David Gang from OP Crypto, Clayton Menzel from Figment Capital, and last but not least, Drew Austin from Red Beer Ventures. Now, numerous studies have shown that emerging managers outperform incumbent managers, the established ones. Why? It's kind of intuitive, right? They're starting out, they're hungry, they're more nimble, and their best ideas are spread in a smaller AUM, which has a larger impact. So, these are the guys you want to be with. Now, let's dive in. I'm going to start with you to introduce yourself, your background, what your fund does.
Awesome. Thanks a lot. So, good to meet all of you. My name's Dave. My background, quick background. So, I used to be head of crypto investments for SoftBank Latin America. So, I've been in the Latin American region for last several years. Short story is I got support from some of the senior executives from SoftBank to spin out and create my own fund. So left SoftBank earlier this year to spin up Palmera. Palmera, we're early stage venture capital for crypto VC, and then how we think about differentiation is through Latin America. So obviously we'll get the best deal flow for Latin America region and help those founders connect to the broader crypto ecosystem, but beyond that, we'll also help, say, U.S. founders or European founders or Asian founders unlock the Latin American region. So helping those guys go to market, connect with the broader crypto and Web2 ecosystem down there.
Hello, my name is Yida. I started in venture at NEA, New Enterprise Associates, in California, and then when my partners were not really interested in crypto in 16 and 17, I left, started the first crypto fund, and Shima Capital is our second crypto fund that is focused on being the first institutional checks into early stage seed, pre-seed companies in the Web3 space. And we're a generalist fund focusing on all verticals from infra to gaming, and yeah, happy to be here.
Hey everyone, so I started my investment career in Qiming Ventures. It's based out of Shanghai, a large Asia-based fund in internet consumer. Then went on to lead global strategy and investments at Huobi for 4 years before launching OP Crypto, which is an early stage investment vehicle that really helps some of the best Western entrepreneurs go to market in Asia, where I spent the past 10 years. And recently we just launched our own fund of fund as well. So just investing in early emerging managers, much like some of the guys here, and helping them support and jumpstart their capital.
Hey everyone, I'm Clayton, a partner at Figment Capital. Figment Capital is a fully independent Web3 infrastructure fund that's spun out of Figment Inc., which is one of the largest enterprise-grade staking infrastructure providers in the space. Me, my managing partner, and our controller at Figment Capital, as well as indirectly a few other folks on the team, have experience on the Figment Inc. side. The team that was responsible for helping launch infrastructure on 40 different blockchains over the past 2 years has allowed us to function more as like an operator investor in the space when valuing infrastructure opportunities. And so generally, outside of our experience, being operators in the space, we spend a lot of time on the infrastructure side of things because generally we're looking at Web3 as needing to compete with Web2 counterparts. And so we're looking at founders that are increasing the scalability, usability, and ultimately the security of the space to increase the adoption from a developer and end user experience perspective.
Hey everybody, Drew Austin. So my background, I've been a founder in New York, founder in the New York tech scene for maybe past 18 or so years. Most recently, I built an AI enterprise software company doing recruitment process automation. I sold that about 2 years ago. Knew I wanted to get into venture, get into Web3 at a deeper level. I've been investing in crypto since 2013. I got my first NFTs in 2018 on Super Rare. Ended up making Super Rare our first investment. I started an AngelList syndicate. I had no idea the full potential and power of these syndicates, but I figured that would be how I'd get some of my early venture experience. With it less than 2 years later, we now have 3,500 LPs on our AngelList syndicate. We've done about 125 deals, deployed about 50 million in capital. So the syndicate was really powerful. That led itself into a managed capital venture fund, which we just started about 6 months ago. We have about 30 million in the door. We're probably going to be finishing that up in the next quarter. And we've already started deploying capital out of the fund. I have the unique perspective of being an operator and an investor in Web3. So I'm the co-founder of Knights of Degen, for anyone who's in here that's a Knight. There we go. I heard all two of you. But the Knights of Degen is the leading sports Web3 NFT ecosystem and community. We own sports teams. We own digital sports teams. We have a fantasy sports platform. And we have a really active community of people that are interested in fantasy and sports betting. So I am just like really jazzed up about all the stuff that's going on here. I love building in the space. I love investing in the space. And this is an exciting time, so I'm excited to talk today.
It's been a very eventful year. A lot has happened in the last 2 months, so I think the crowd is very keen to hear your insights on what are you doing now? Are you deploying? Are you holding back? What do you like? What do you don't like? Please enlighten us. So Drew, I'll start with you again.
Yeah, so I would say that from an investment, so I guess first of all, I think that this is an opportunity to reflect, especially for myself. I'm a new investor. I'm 6 months into the fund, about 1.5 years or 2 years almost into investing in general. So it gives me this is a great opportunity to just sit, reflect for a second and really kind of recalibrate your thesis, your philosophy, your strategy. I think a few things have come from me. One, I think that my pace has definitely slowed, which I think is a good thing, and it's intentional. My pace is slowing because I'm allowing the market and the valuations to just start to clarify a little bit and correct a little bit. I think there's obviously a need for that. So allowing to see how companies will be priced in this new landscape, I think you just need a little more patience to let that unfold. I think second, I'm leaning more and more into, and I've always been a believer in this, but I want real decentralized companies. I think that I'm a huge believer in the token economy. I think that true utility token opportunities are going to be where the big gains happen in venture investing and some of the biggest companies are built. But what I think that we've seen so far is that people are still just scratching the surface of how to design true utility and how to design strong tokenomics that are organic and enhance the capabilities of the platform. So we are actively deploying capital. We are actively investing. I'm a huge believer in the fact that I think the AAA gaming, companies are going to come in over the next 12 to 24 months, bring more adoption to Web3 than we've seen from DeFi and NFTs combined, and that's going to reignite a lot of the excitement and bring a lot new capital and new users into the market. So I'm deploying capital. We're investing. It's a slower pace. We're patient, and we're really leaning in on companies that really understand native decentralized principles.
Good stuff. Clayton, over to you.
Yeah, so we're currently raising right now, which is super fun. But that being said, we're still getting a lot of access to deal flow, and like you mentioned, things are slowing down. Not just from us personally investing, but also what founders are thinking about and how they want to launch and who they want to bring in, which has actually been great because we can have conversations that last months. As opposed to sometimes last year when it was, a week, 2 weeks, and the rounds get closed. So in that regard, I think in general, everyone is very optimistic about what this space is going to be long term, and they're actually happy that they're able to kind of chill out for a bit, rethink about the basic principles of why we are all here, and the things that exploded this year are associated not with those core principles of what blockchain technology is supposed to be. And so how do you go from one to 2 at this point now, learning from everything that we've learned over the past year. And in general, it's you know, decentralization, self-governing protocols, and verifiable on-chain data that you know, we should be you know, investing in at scale. Creating experiences that are competitive to Web 2, and also creating foundational layers that allow developers to build applications that are competitive to Web 2 on decentralized pieces of infrastructure. It's generally, you know, the conversations that we're having right now.
All right, I think we're a little bit in the contrary there. So right now we're actually looking to be more actively involved in leading more deals. We're lucky to be fully raised last year, so don't have to be sort of in the fundraising environment now, but I think going forward, it's really looking to double down on some of the best founders that are looking to build something meaningful in this space now. But at the same time, you know, given my background of being a pro gamer and having started in a solo Web 2 startup, Web 2 social startup, we focus a lot of our energy on, you know, what is going to be shaping the future of gaming experiences for new users. Like, how is it going to shape sort of the social paradigms of monetization for influencers, streamers, and whatnot. So, you know, we really dictate our thesis on the future of the application layer infrastructure. So all the different infrastructure that's ultimately going to be powering the next level of Web3 applications that's going to bring mass adoption to the space. And, you know, we're more than happy to now double down into some of those founders and, you know, help people go to market in a very international and global way, given our access to, you know, low sort of cost user acquisitions in Asia and, you know, sort of our global presence across the board.
So I agree with David. You know, we're definitely, you know, not slowing down on the investments that we're making. And I think right now, if you have, you know, capital to deploy, you should be giving, you know, founders more capital, because it's a larger advantage if you have more capital now. And anytime we fundraise, we try to have, you know, runway for about 18 to 24 months. Now we're trying to push that even higher. And, you know, finding the right founders to use that capital is now, you know, top of mind for us, because there's been a lot of kind of oversight and governance in the space. And so that's something that we're hypersensitive to, have been, but now more so given the events of the last month. And I think a lot of the non-emerging funds, you know, traditional venture funds that kind of came into crypto last year or the year before with, you know, massive checks and high valuations are now kind of pulling back. And so we see that as a pocket of opportunity for us to really take the reins. And I think this is when not only, you know, great unicorn companies of tomorrow get formed, but also, you know, great, you know, generational funds like the ones on this stage.
Nice. I mean, for us, we're still fundraising as well, so difficult for us to deploy super aggressively. But I do agree with Yida and David in that deals are much less competitive now. It's easier to find opportunities for founders who actually believe in crypto. But how we think about coupling that with the risk perspective is finding opportunities that will last the next cycle. I think right now the name of the game is finding opportunities that will pump on the next bull run. If you look at crypto markets in general, crypto markets are highly correlated. So right now, you know, we're in the bear market. We have a lot of A-tier assets that have traded down 50, 80%. Similarly, in last year's 2021 bull market, there's a lot of not so high quality assets that traded up 10, 20, 30x. So I think if you're able to identify the opportunities right now that A, have a strong founder, B, are in sub-industry or sub-vertical that is a bit more de-risk on a relative basis, I think right now is the best time to be deploying to find the biggest gains going into the next cycle.
So David, I'm going to go to you because you wear two hats today. You're both a manager and you're a fund of fund, and you write checks to other funds. So tell us a little bit about how you're doing in that area and what you're seeing from some of the managers you've given money to.
Yeah, I mean, as everyone mentioned right now, that it is a difficult time to fundraise. So luckily also for us, like the fund of fund was mostly raised in the early parts of this year, but it's absolutely the best time to also be investing in managers, not only the direct investment deals themselves as well. So I think managers nowadays, because capital is so scarce, they're willing to really cut back on some of their fees that they're offering. So I think in the future of like Web3 venture, fees are only going to be pushed up. Like we've already seen some of the mega funds do this, going from 2.5% management fees all the way up to like 30% carry in some instances. I think this is now where a lot of people are now scaling back, offering 1 in 10 terms to a lot of these fund of funds. I think that's where the opportunity set lies, and even GP stakes that were being offered now that otherwise weren't being offered in a bull market at all. So I think there's tons of opportunities. We see investing in managers the same way as investing in early stage entrepreneurs. They're at the end of the day, like we're all startups, all 5 of us here. We're just in the startup fund vehicle. So like in that stance, like investing in early sort of equities of these fund managers, you're able to get extremely high upside in terms of not only the dividends and carry that they're able to pay out, but also at the same time, you're essentially capturing all the upside from every portfolio that you invest in with their fund as well. And us as like a venture fund on top of that, is like we're then able to double down in with some of the fund managers that we're able to make back and co-investing with them, and ultimately better help those projects really bring in as much value as possible and capitalize on that opportunity.
As our clock clicks down and Yida has a flight to catch, I want to end with one quick question, actually to Yida. A question I get from a lot of LP is they feel a lot of people got into this, meaning the companies, because of the hype. And they're worried now with token prices down, market down, that we don't get the same entrepreneurs coming in. And I know you write a ton of small checks to early founders. What are you seeing?
I think this makes our job a little bit easier in terms of finding founders, because the ones that were here for the wrong reasons aren't here anymore. But we are still seeing a lot of folks leaving FANG, leaving cushy jobs to get into the space because maybe they were a little bit too kind of frazzled by all the hype that was going in the space. But now, once everything is kind of cooled down a little bit, it's easier to hire, right? It's easier to find talent and poach, and you can increase your runway a lot because of the bear market, not only in crypto, but I think generally we're heading into a recession. So I think this is a good time for smart founders to come into this space if they believe in it. If they don't, then they're not here anyway. So I think this is a good time for emerging managers to really double down on founders.
If it's up to me, we'd be up here all day, but our time is up. So please join me in thanking our panelists for the excellent presentation.